Good morning, good morning. Nice to have you all join me today. How's everyone doing today? I hope you guys are having a good morning so far. Yeah, we got a lot to cover. It's been a few weeks, a couple weeks since we did a live session together. Been posting a lot of analysis and doing a lot of video editing for the YouTube videos that we've been posting. So I hope you guys have been getting a lot out of that. And so we got some markets to take a look at. I asked what markets you wanted to look at, and you gave me a big list: gold, NATGAS, Amazon, euro, dollar. Pretty much those are the main ones that I've seen. And if there's any that I've missed, just type them here in the comments section. And we'll have a look. We'll take a look at those charts and see what the institutions are doing with price on those charts. All right. So, we're just looking briefly through the Wall Street Journal here. And looking at the headlines, as I like to do each and every day. I'd like to see what the Wall Street Journal is posting, what they're talking about, what they want investors to read. Very important information, what we gather from here. Not that I believe everything that's written, because that's not how I use this newspaper. I look at what the reporters, so-called reporters, are trying to get investors to think. That's what the main thing is for me. So, downturn in stocks accelerates. If you remember, last week we had some headlines coming out where they were talking about how the markets were just dipping into bearish territory. Do you remember that? Markets were just tiptoeing into bearish territory. Well, we'll take a look at the markets and see what condition the markets are in, because it's very misleading to write headlines saying that the markets are just tiptoeing into bearishness when we're actually in bearishness based on the trading by the institutions. And if you've been tracking the trading and you've been studying the trading by the banks, and you know what formations they create on the charts when they're thinking about pushing price down, then you'd know very clearly that what's taking place on the charts right now is extremely, extremely bearish. All right. So let's see. Individual investors snap up treasuries. Musk wants Tesla staff in office. What else do we have here? Missed payments, rising rates, test buy now, pay later firms. Co-heads named for Warner movie division. EU test order threatens. Okay. Buy now, pay later. Feltz. Okay. Anything that really sticks out? No, nothing really sticks out to me. Okay. Another one that I like to check out is CNBC. This one's just lovely. This website's just lovely. Fed Vice Chair, okay, says it's very hard to see the case for the Fed pausing rate hikes. Says it's very hard to see the case for the Fed pausing rate hikes. Yeah. This is interesting. Bank of Canada just increased their rate again. First a quarter point, then half point, and then another half. So we've still got a lot of work to do to get inflation down to 2%. You see how contrived this is? They keep raising interest rates, and yet, we've got a lot of work to do to keep the inflation at the 2% target. Meanwhile, the inflation is being created on purpose. Okay? Who was the one that stopped the oil pipelines? I mean, it wasn't us. You get oil going again, and everything goes back to normal. What's happening with all these processing facilities that are processing food? Miraculously catching on fire. Where's this coming from? Like, how is this all happening at the same time? And so when they say we're going to keep raising rates until we get inflation down to 2%, if the rates have nothing to do with the inflation, and the inflation has to do with the policies that the government is pushing forward, plus the trillions of dollars that they're printing left, right, and center, then you see how there's no correlation between raising the rates and the inflation. If they want to keep the inflation high, they're going to keep the inflation high. So I'm very watchful of these rates, because it seems like they're just going to continue raising rates, okay, until they cause more damage. Let's see. Ford to add 6,000 U.S. jobs, okay. As it boosts electric vehicle production and prepares for a new Mustang. Yeah. Electric vehicles is all the rage. When we look at the stocks, we don't see RIVN doing much these days, have we? You know, it dropped to lows of, what, $20, RIVN. Okay, very low, very low. I wouldn't be interested in trading this one for some time. On the other hand, Tesla, I've been watching this one quite closely. Excuse me. I've been watching this one quite closely. We see the area where this one quite closely. We see the area where where Elon Musk was taking profits on his positions. Nicely up here, huh? Not bad. In the $1,000 range, Tesla taking profits there, and now we have it drop down to below 7. And from what we're seeing, this can go even further, down to below 500. Tesla before 500, below 500 very easily, okay? Because institutional buying is down here. This is where institutional buying is. And as you can see, we're midway to reaching that area. We haven't reached it yet, so it's still in the process of getting there from what we are seeing. All right. Let's see. Yeah, did you read about that? Biden administration to cancel student debt for 500,000 students. He's not doing that out of the kindness of his heart, just to let you know. But again, this is another stage in, you know, we'll take everything that you own and, you know, then, you know, we'll get rid of your mortgages. We'll get rid of all your debt, but we'll just own everything. And then you'll have to, you know, live off of what we supply you with. Very, very crazy. So let's take a look at the SPY. So here's all these articles coming out and saying that the market just dipped into bearish territory, just dipped into it. And miraculously, we were able to escape from that bearish territory. Well, that's not what we're seeing here. Okay, the main thing that I'm going to point out here is that we have a significant downtrend here on this chart. This is a weekly chart. Okay, so when you have a trend on a weekly chart, we're talking about a time period, a medium to long-term time period. Okay, medium term is multiple days, multiple weeks. Long term is multiple weeks and multiple months. So if you have a downtrend in a medium term, that means for multiple weeks, multiple months, you have momentum geared to the downside. All right? Geared to the downside. And so right here we have an area that is institutional supply. What does that mean? Well, that means this is the latest area where the banks came in and filled in positions to push the market downwards. And so what typically happens when you have an area where the institutions were coming in and forcing the market to the downside, and that exists within a downtrend, then that almost ensures that over the medium/long term, we're going to have momentum to the downside, okay? Just based on what we're seeing here on the weekly chart. So this is extremely strong evidence to suggest that over the very long term, we're going to get a move to the downside. Now, as this was being created, the headlines were, oh, we just tiptoed into bearishness, but we broke that. And, you know, this big rally up here in the market, you know, they got so excited about that they were comparing it to, oh, the last time we got a rally like this was back in this time. And so, you know, that's to give false, this false idea that the market is strong. and these false hopes, to investors who think, oh, I've withheld my positions. I held my positions all throughout this drop, and I was reassured that, this was just a small pullback until it continued higher. Because what are they saying? Okay, what is the marker for when the market enters into a bearish territory? It's 20% drop. Okay, that's what they're telling us. The media is telling us if there's a 20% drop in the market, then it enters into bearish territory. Okay, so think of it this way: if I controlled the market, right? And I also controlled, and let's say I ruled this little community, and it's the only community that existed in the whole world. Just this one small community, and it was on an island, and there was no connection to the outside world. It was just us on this island. And let's say I controlled the little market that we had, okay? And let's say I bought extremely low in the market, okay? Let's say I bought down here. And I rode price all the way up here. And now I'm ready to take some profits, which is going to cause the market to drop because I'm going to supply the market. And I'm thinking now that I want to take a reverse position and short the market and drop it down and down and down. Okay. Now I know once I drop it to a certain degree, people are going to start to say, hey, it looks like the market's going to go down. And then if I'm selling the market, who am I going to sell to when everybody's thinking this market's going to go down? I have nobody to sell to, right? Because the market's dropping. Wouldn't it be ingenious of me to, let's say if I had the only newspaper publishing business on that island, and I publish the newspaper and I pay the editors to write what I want them to write, and I say, I'll tell you what, why don't you tell all the inhabitants of the island that the market is actually in a bearish territory if it drops 20%, okay? Meanwhile, when I flood the market with selling, I'll ensure that it never drops more than 20%. So that the idea that we're still in a bullish market is what is held by the inhabitants of the island, right? So I'll drop the market a certain percentage, but 18, 17, 19, maybe if it just so happens to pass a little bit past 20, I'll get my newspapers to say, oh, we just dipped our toe into bearishness, but we popped back up. So we're still in bullishness. Wouldn't that just be an ingenious way to sell the market, causing a drop in price because you're flooding the market with selling, and then causing the rebound when you stop the orders, allowing it to rally up? Wouldn't that just be ingenious? Yeah, it would. So you think it's possible that they're doing that? I mean, not only do I think it's possible, I think it's highly, highly probable, okay? Because we're not talking about an island, we're talking about North America. We're not talking about one newspaper, we're talking about multiple media outlets. But as we've done in the past, we know that there's just two major corporations that own the vast majority shares of all the media companies. Okay? And they're the same people that own the vast majority shares of all the big banking institutions. So, I mean, what I'm saying is not, something out of this world. So I'd be watchful of that because I suspect this is what's taking place. All right. They're keeping these drops less than 20% so that you're still thinking that, we're due for a much larger move to the upside. And then what do you have Mr. Kramer come out and say just the other day? Did you see that? Did you see what he had to say? Here, let me show you in case some of you missed it. I got it right here. He comes out and he's like, oh, I think it's going to be a really good time for the summer. Really good time for stocks this summer. It's going to be rallying up. Market's going to be very strong this summer, so don't you worry. We just quickly dipped into bearish territory, but we're good now. Charts suggest it's going to be a very nice summer for stocks. Really? It's going to be really good time for stocks. Let me ask you. Do you believe this guy? Do you believe this guy? Would you let this guy babysit your kids? You believe this guy? Oh boy, oh boy. You know, so yeah. So he comes out and says, yeah, it's going to be a good time. The charts suggest. No, don't worry about what he's telling you the charts suggest. Okay? We're telling you, because we've studied charts. You know, they say you got to put 10,000 hours to become proficient at something or become expert. Okay. Well, put in 40,000 and see where you get. You get pretty good at reading charts, especially when you've been studying what the banks do, what they have done, and you see what happens every time they create a weekly downtrend in the market. What happens every time they create a weekly downtrend in the market? It's interesting to find out those things because then you start putting the pieces of the puzzle together. So that's what we're seeing here. So over time, I think it is possible that, you know, we sit in this kind of a range here. Okay, let me show you this range. I think over time, it is very possible that we start having price stay within a range here. Okay, so I think it's possible that price goes up like this and does something like this for a bit. Because what I believe will happen if this is the case is that every time the market rallies up here, they're going to use the media to lure people into buying. All right. Because what do you think the big institutions will be doing? They're going to be selling. And if they've got a very large position that they want to sell, and believe me, they have a large position. Okay. They've been accumulating since early 2020. Seriously. Okay. Serious shares of all the major manufacturing technology companies and so forth. They've been accumulating. So they're not just going to keep on accumulating forever. All right. And they do realize that they can't create wars, raise interest rates, raise the cost of fuel, groceries, you know, force people out of work, close businesses. They can't do that and still push the market up like nothing's happening. They know that people are going to start to wonder, you know, what's going on here. This market can't be continuing to go up if all this is happening in the world. You know, rates are going up. Shouldn't this be affecting these companies, right? When rates go up and the cost of oil and the cost of transportation and everything goes up, shouldn't it be affecting these companies? So they've got to make it look like, yeah, you know, it does, right? So they know that people are going to be fearful. So they're going to want to push the market down. And, but they're going to lead people to think that these drops are just, you know, reactions to what's been taking place with earnings. You know, we have Walmart that came out and a bunch of other companies that had bad earnings, especially Netflix. And so, you know, this leads people to suspect, ooh, you know, maybe, you know, these companies are being affected by what's happening. I mean, these are big corporations and, you know, nobody's immune to these problems. So it's not just the small business that's being affected. It's the big corporations too. So yeah, it makes sense. So there is, you know, there are a lot of investors that are smart. There are a lot of investors that put the pieces of the puzzle together and recognize that if one company is taking a loss, most likely a lot of companies are going to be taking losses. So they're going to hedge their bets. They're going to take profits on their positions. So they're using this as momentum to fuel the market to the downside after and only after they get out of their long positions and position themselves for a short. That is why they're keeping these drops below the 20%. All right. So if it enters into a range at the highs, they're likely going to be shorting and getting out of their long positions. But If it does enter into this range like this, I believe that over time what will happen is it will eventually break out of this range. And, you know, retail investors, what do you think they're going to be doing? They're going to, after it's too late, once it's already established the fact that there is a range, you know, it'll be too late. And retail investors will think, oh, okay, I'll buy at the lows and sell at the highs, buy at the lows and sell at the highs, right? And then they'll start buying here. It'll go lower and they'll say, oh, even better. And they'll keep on buying until they realize, uh-oh, it's not in a range anymore. And then we have this. Okay? So I'm watching for this. This is what my eyes are focused on, because after years of studying the charts and putting in around 40,000 hours of studying how the institutions move price along the charts, I've come to a certain understanding of how the market works and what I'm seeing on the charts. And we've laid this out for members in quite some detail, exactly why we believe this is likely going to take place. This is, you know, over the long term, you know, we're talking about this year. If we're looking at what's happening on the weekly chart, this could take for the rest of the year. Okay. If not, if price does not go into this type of scenario, it can just consolidate here a little bit longer and use this downward trend on the weekly chart to help facilitate a move to the downside. That's also another possibility. So we're going to be watching going forward to see how price reacts. And there's going to be several indicators on the lower time frame charts, okay? On the weekly chart, on the daily chart, I should say, and on the 2-hour chart of what scenario is more likely to play out, okay? This is the early stages of this. So we'll be watching those lower time frame charts for those indications of what will likely take place moving forward. Okay, you guys understand all that? Okay. No, I don't trade fundamentals. Nope. But I do take what is being told to investors as part of what is taking place, and the thinking behind why they would cause such a move in the markets now. Why would they cause such a move in the markets now? There is reasons why, right? There's investors out there that are reading the newspapers and taking a look at the policies that the governments are pushing through and what the Fed is doing. And so they're going to be reacting accordingly. Okay, so let's get on to, some of you want to take a look at gold. Gold is rallying just as we had told you. Okay, here's a daily chart of gold right here. So let's put things into perspective, okay? Let me bring up what retail traders are doing with their positions. Let me take a little snapshot here so we can use it. Here we go. There we go. Okay. This is what retail traders are doing in the market. So if you remember, we had the institutions lure retail traders. Well, let me color here. The institutions lured retail traders into going long here. They lured retail traders into going long here. And now they lured retail traders into going short here and here. Okay? Do you see that? You see how they are mostly short gold right now? You see how they go long at the highs and go short at the lows? Why is that? Why would anybody buy something at expensive prices and sell something at cheap prices? They wouldn't, right? Unless you would only buy something at an expensive price if you believed that price was going to go higher. And you would only sell something at a low price if you thought in the future it was going to go even lower. But if you paid attention to what the media was broadcasting at these very crucial moments, you'd also understand why retail trader was lured into going long at these highs and short at these lows. And what were we saying? Okay, we warned everybody not to go long here. We warned everybody not to go long here. And then up in this area here, I posted this on my chart, and I was telling my members, I said, look, you know, it's very likely price is going to go back up like this. All right. And one of the main reasons why is because the fear of missing out with retail traders is very strong. Okay. So when price is doing this, coming up like this and surpassing previous highs, what have most retail traders read in books? When previous highs are taken out, go long, right? And then you have key support and resistance areas and all that stuff, okay? Like, what do you think? You think the bankers don't know this information? They know this like the back of their hand. They've had professionals taking the information from these books and typing it into algorithms so that they can create certain price movements on the charts which replicate the patterns that are taught in those books. I mean, you don't think they would do that? If you don't think they would do that, then, you know, you're not seeing what's going on here. And I don't know this for a fact because I'm not sitting there watching them program the algorithms, but I've been studying the markets long enough to know that the amount of coincidences are staggering, okay? What the media says and the chart patterns that they create on the charts. I mean, and I look on social media. I go onto Twitter and I look to see what your average retail trader is thinking when they're looking at price action on the charts. And I always hear it. Oh, head and shoulders. Oh, it's a bat pattern. Oh, it's a double bottom. Oh, they're creating this. Oh, the 20 period moving average is being contacted. I mean, it's over and over and over. And what do you think? You don't think that if 99.999% of trading books tell you the same methodologies, just in different ways, but it's the same chart patterns, the same idea, support and resistance, the same thing. You don't think that they would use that information against you? Obviously, they would. So what do you think happens when this low is taken out? Well, isn't that support, right? Isn't that support? When support gets taken out, you know, what happens? You go short, right? But you just want to make sure. You just got to make sure 100%, right? Or maybe they're even looking at something like this, where they're drawing something like this, right? Oh, price, you know, this is support. This was support. You see how? And then it broke support. It was a fake out. It was a fake out. Yeah, it was a fake out. Yeah, sometimes fake outs happen. Then it came down and it broke through support. And then see, it's support and it's support. And then I bought the breakout of that resistance. And then it became support. And then it became resistance. And then now, okay, so when it comes back, it's support. But if it breaks it, then, you know, now it's the good time for shorting. Okay, it's nonsense. It's complete nonsense. It's being used against people. So, and we see this time and time again. And so now retail traders are getting into short positions down here. And now what? The banks are going to take it up. Okay. And when they push it up high enough to the point where retail traders can't take it anymore and they close their shorts, guess what they're going to do? Yeah. Exactly. But what do you think the banks are doing during this period of time? They're offloading long positions. And that's the beauty of having the CFTC caught data, because we can actually take a look at their positions and see what it is that they're doing. Okay. And we post this on our blog. I don't know if you guys are aware of this, but if you go to our website, whiteoakfx.com, you click on blog, you should sign up for these. Okay. You should sign up for our blog. You just put your name here and email address on the side here, and you'll get email updates when we post new entries here. And the latest one that we did was just a day ago. And here it is, right? I give you a brief summary of what we're watching in terms of gold, oil, euro, and Bitcoin, and the S&P, and and I actually post all the positions by the institutions along with the chart, the supply. This is gold, okay? I'm giving you something that nobody else is giving you. These are institutional positions, and I'm showing you the supply and demand that the banks are creating. And look at my chart. I've given you arrows of where we suspect price is going. Originally, I had these two arrows when price was up here. And see how they've been shaded out? That means the move has already taken place on that time frame that I had forecasted. I still have two more arrows here that have not yet been played out. And I am expecting them to play out. So I am expecting gold to do this. Okay? So you see how we can logically take a look at the chart and determine what the banks are doing, right? But then it's another thing to actually take a look at the data and see exactly where the institutions were very heavy with their long positions and see how they are using these moves for profit taking on long positions. Now, what did we just finish concluding by taking a look at the gold chart? What did we finish concluding? That they're using these pushes up to offload their long positions, right? Who do you think is buying? Retail traders. And buying from who? The banks, who are offloading their long positions. Okay? That's how it works. See? Long positions. $364,000 down to $324,000. And then they bump them up, right? They increase long positions to rally price up and instigate the move, so that retail traders can come in and start buying when the media tells them, oh, gold is going to go up. And then immediately they close off those positions, 338 to 330 to 310 to 293, 288, 283, 282. You see that? They're offloading long positions. And then they increase their shorts from 95,000 to 107,000. Why do you think they do that? What do you think happens when they increase their shorts so dramatically? It causes a push down. And this big push down, guess what most traders are thinking? Oh, I don't want to miss out. I don't want to miss out. What a big move. I missed out on getting in short from the highs because I thought it was going to continue going higher. But now I don't want to miss out. This sucker is going to drop, and I don't want to miss out on this short. So what do? They get in short right at the lows, right before the banks push it back up again. You know, it is extremely frustrating when you don't know what's happening in the markets. It's extremely, extremely frustrating. I understand. I've been there. I've been that sucker. You know, for a long time, I was that sucker. You know, when I was learning to trade, when I was learning how these markets move, I had to first understand why they move the way they do. Why is the media always saying the exact opposite of what the supply and demand on the charts by the banks are suggesting? So gold is one that you guys wanted to look at. I think another one that you guys mentioned was the dollar. So we have the dollar uptrending. And so we've had a drop from the highs. We timed this very, very well with what was taking place with the US dollar, Canadian dollar, and the US dollar, Japanese yen. They hit major areas of selling. So the banks came in and sold their long positions, which helped fuel this drop in price. But over the very long term, we're expecting the dollar to continue going higher. I mean, everything has been pointing in that direction, a dollar getting stronger. But we also see very strong evidence to suggest that over the medium term, we can get a bigger drop in price here. So we're watching for that. Okay? There is a chance, and we'll be watching the smaller time frame charts for evidence to support a move to the upside. Okay? Because there is a chance, but there's an overwhelming amount of evidence to suggest that shorter to midterm, we see a drop in price. Okay, if we take a look at the euro, this is what we have. And so what are retail traders doing? Okay, They're getting in short. Why? Because price is at the lows. The same reasons why they got in short gold is the same reason why they're getting in short the euro. The same reason. Because they were long. They were long at the wrong point when price was dropping. Okay, they were long. They were long. And then they're like, okay, we can't take this anymore. Let's just start going short. And so they short, and they're like, okay, it's just a rally, but it's going to drop again, you know, and they just keep on adding to their shorts as price rallies. Okay, so the fact that they keep on adding to their shorts is even, it just adds to the evidence to support that we have a bigger move to the upside that's going to take place. Okay. But again, like I said, we're going to be watching the lower time frame charts to see what the banks do on the lower time frames, because the more price plays out on lower time frames, the more we'll have to justify whether there's going to be a move to the upside or to the downside. Okay, but evidence is suggesting short term, medium term that we have a rally at this point, even though there's major institutional selling that is taking place here on the euro. There is a selling area that we're contacting. Even though that's been contacted, we still think that there's a likelihood that we see price rally. And, you know, we're gathering that information by taking a look at the markets in general. We're not just looking at the dollar and the euro. You know, we don't make our trading decisions just based on that, because there are times where the euro and the dollar will be the significant driving factors of how the other currencies move. But there are times where the supply and demand dynamics of the other charts are the ones that take the lead in how the euro and the dollar will eventually move. Okay. So that's the euro. NATGAS. Let's take a look. Natural gas futures. Is this what you guys are looking at? Is this what you guys are looking at here? All right, so let's take a look at a monthly chart of NatGas. Okay. And it looks like we have some institutional selling coming in here. Medium-term institutional selling coming in here. So medium-term meaning we could get a drop in price multiple days, multiple weeks in duration. That could eventually go into a little bit longer. That's what I'm seeing. And let me confirm that here. Yeah, that's what I am seeing. So yeah, it could, and yeah, we're already getting a decent reaction from 942 to 846. Yeah, it looks pretty decent for move to the downside, but the trend is up. The trend is up. Okay. So when you have a trend to the upside on a monthly chart, that's telling me that over the long term, we can see more upside to come. So yeah, there could be a drop. Okay. Any number of moves before it continues to the upside like that. So you'd have to wait to see what happens from these highs, watch the lower time frame charts and learn from that and take it from there. That's how you'd be able to determine. Okay. Any other charts you guys want to look at? Amazon. Yeah, it's going to take some time. Even Amazon suggests that the markets are going to go up medium term before a bigger drop to the downside. That's what I'm seeing here. Okay, ladies and gents, I think that's pretty much it. I think we did well. Going on 40 minutes. So bottom line, just to recap, be watchful of what's going on here on this chart, on the SPY. Okay, because I think this summer, there could be some more of a rally from where price is. Medium to long term, there could be a rally, but I think that over the longer term, the very long term, we could see definitely a lot more downside. But we could see some ranging for this year or so. Okay, again, stick with us, stick with the Telegram channel. We'll be posting some information, but if you want more detailed information, you can become a member at our school, whiteoakfx.com. You just come to this website, okay, and you can find out all the information. Go click on services, membership options, and we have all of our membership options there for you, okay? If you want to become a student, now would be the time, because we're raising prices this month, okay? Prices will go up and they will not come back down. We've already increased our White Oak Access, formerly Basic Access. It used to be $49 a month. Now it is $79 per month, okay? Or you can get the 3-month promo for $169, okay? $169 for 3 months, and then it's $79 per month after that, okay? So sign up soon, because once the prices make a move, they're not coming back down. Okay. All right. All right, ladies and gents. So it was fun. Thank you so much for your time today. I appreciate it. I missed chatting with you guys. So it was nice to see all of you. Be well. And I will see you in the Telegram channel. Okay. Thanks, everybody. Have a great day.